Welcome to Global Investment Insights, a weekly podcast brought to you by ADCB Asset Management. My name is Kishore Muktinutalapati, Head of Investment Strategy. With an objective to empower you with investment insights, on this program we discuss various perspectives that are shaping the global investment landscape. Since the start of 2020, spot commodity prices as measured by Bloomberg Commodity Price Index rose circa 37%, outperforming equities which were up 15% over the same period. However, this period can be broken down into three distinct phases. In phase 1, thanks to the pandemic-induced demand concerns, commodity prices fell sharply by circa 25% during the first 3 months of 2020. Markets were worried about deflationary outcomes for the global economy, and therefore commodity prices fell sharply, reflecting this. However, over the subsequent 27 months, the second phase of performance, commodity prices rose a whopping 157% as demand for manufacturing goods and travel improved. Sharp rise in inflation across the world also helped the investment case for commodities which were considered inflation hedges. During this period, the manufacturing sector strengthened while the services sector remained acutely impacted by pandemic disruptions. Nevertheless, during the third and the most recent phase since June 2022, the commodity index fell circa 30% as inflation moderated and demand rebalance from goods into services took hold. This sharp fall in commodity prices over the past 11 months was led by the energy complex, where prices fell 52% and industrial metal prices fell 23%. Agricultural commodities fell 21%, while livestock prices rose only marginally. However, boosted by the haven status, the precious metal prices rose 7% in the last 11 months. Now, thinking about the case for investing in commodities, there are primarily three reasons to have portfolio exposure to this asset class. First is inflation. Given the ability of commodities to maintain their value in real terms, they tend to be attractive at times when the inflation is rising. Second is rising interest rates. Unlike financial assets, commodities are not valued based on discounted future cash flows, and therefore, rising real rates do not materially influence the present value of commodities. The third reason to consider portfolio exposure to commodities is their ability to provide diversification. From a macro viewpoint, inflation and interest rate trajectories may not be incredibly supportive for commodity price performance looking ahead. However, diversification is still a reason investors might want to retain exposure to this asset class. When thinking about the outlook, one should never forget the fact that commodity block is a diverse set of things ranging from livestock to iron ore to gold to crude oil. It's worth considering the outlook separately for precious metals, energy, industrial metals, and agriculture. First, on precious metals, we retain our constructive view on gold. However, given the recent impressive performance, we expect gains to slow in the months ahead. Moving to energy, concerns of global growth and improvement in supply dynamics have put downward pressure on oil prices in recent months. However, we think the OPEC Plus discipline will put a floor under the prices. Therefore, taking the rough with the smooth, we expect oil prices to stay flat over the coming months. For industrial metals, the complex is likely to remain under pressure from weakness in the manufacturing sector. Ongoing rebalance of demand from goods to services does not help. However, within this space, metals linked to green transition have a better outlook. Turning to agriculture, El Nino weather event expected in the second half of this year is likely to have mixed impact on different soft commodities. However, in aggregate, we expect this weather influence to be deflationary for soft commodity prices broadly. In summary, the outlook for commodities remains bleak, but gold shines. Risk to oil prices are balanced. Thanks for listening. We hope you found this podcast useful. If you did, please do share this and other episodes with family, friends, and colleagues. For more information, please reach out to your contact at ADCB. You can also log on to our website at www.adcbam.com. This is Kishore Muktinutalapati signing off.